part 2. We left off in the how to protect your cryptocurrency. And now we are going to go into how much to start with. This is a big question that I get pretty often when it comes to cryptocurrency. A lot of people ask, do I have to buy a whole Bitcoin? Do I have to put in a certain amount of money? Anything like that? Answer is yes and no. Sometimes there's exchanges that will require you to at least put in $10 or $20 or something like that. But if you're going to start getting into this, I would recommend starting out with that anyways. So that's kind of a no. The amount of money that you should start with in crypto just depends on your financial situation and your investment goals. Meaning, if you have a goal to make $100,000, it's going to be kind of hard to make $100,000 with just $1,000. Okay, so even if you get lucky, $1,000 to $100,000, you're gonna have to look at 100x. All right, and you're gonna have to put everything into that one, which I do not recommend doing because just trust me. Not financial advice, by the way. Risk tolerance. Crypto is very volatile when it comes to just it being so speculative, and if you're not in the top 100, then you're gonna get even more volatile than what it is. We have 10 to 15% moves in a day. That's completely different when it comes to the stock market. It's just insane. Okay, the amount of profit that you can make in here is great, but the amount that you can lose is also great too. What goes up comes down. Your investment goal will also play a role in determining how much you start with in crypto. So meaning, like, are you investing for the long term? If you're investing for the long term, are you dollar cost averaging in, or are you just going to be trading? Are you just going to build a trading strategy? And that's also going to determine how much you start with in crypto because, well, like I said, are you dollar cost averaging, or are you trying to make a lump sum in a quick amount of time? You're going to need a lot more money because you want to make a lot less moves. You're not going to want to make a bunch of small moves because it's just going to be a lot harder. Just trust me on that. Okay. In general, it's recommended to start with a small amount, gradually increase your investment as you become more familiar with the crypto market. Some exchanges do have a minimum deposit, like I said, and it can range from a few dollars to several $100s. However, the ones that I listed in here would be good for a beginner. They're really good exchanges, I feel like. Ultimately, the decision on how much to start with is a personal decision. It should be based on your own financial situation, risk tolerance, investment goals, and do your own research. Not a financial advisor. Please consult with one before you invest. How you should invest, like I said, dollar cost averaging, DCA is popular, proven. You could use it in stocks. You could use it in your retirement. That's mainly what people do, right? Dollar cost averaging, if you're putting a little bit away every time you get paid, right? That's dollar cost averaging when it comes to retirement. So why not do the same thing with crypto? Same exact thing. Another way to invest that I learned is like dollar cost averaging, but buying on red days. So when it has an extreme red day, you buy a little bit more than you would on just a normal red day. This means that your choice of crypto having a bad day is when you buy. So you could use those two in conjunction, which is exactly what it is. Taxes and coin trackers. Now, there are a lot of coin trackers out there. I'll let you be the decision maker based on your needs and how much you trade and things like that. Right now, I think I was using Coin Tracker. I don't know if I'm still using that. I don't go in there like that because I mostly use Coin Market Cap. I just do all my stuff manually on a spreadsheet, and I try to keep as good as track as possible. These are going to be a little bit more accurate, but just in case these things mess up, which they do occasionally mess up, then I have something that I can look back on and be like, okay, I know that I spent at least this amount, or I should have about this amount in here. So it just gives you a nice little backup if you do it manually on a Excel sheet. But like I said, I use Coin Tracker. They seem to be pretty good. calculates your cost basis, what it costs for you to buy the cryptocurrency, like the fees and things like that, and keeps your accurate trading details so that way you can pay your taxes whenever you get ready to sell. You can also report your losses up to a certain amount, and but you don't have to if you don't, you know what I'm saying, if you don't do that. I haven't personally put anything on here. I just been holding mostly. I came across some losses, but I'm just waiting until I hit that big number, and then I will go ahead and file and pay them their money, because the taxes thing just gets very confusing. Like, I feel like you need somebody else if you're not exactly sure what you're doing. And they have those where you can connect the two, like TurboTax and everything. You can import everything too. What is that? Staking is similar. So staking, you'll see this a lot on Coinbase, I believe. Yeah, you can do it on crypto.com too, but I'm not exactly sure which ones you can do, because I had on Binance.us, I was staking on there, so I know it's definitely on there, and it's definitely on Coinbase. But staking is similar to a savings account. Depending on where and what coin/token you stake, you will earn daily rewards and interest on your stake balance. So when Ethereum 2, I guess, was coming out, whenever they were doing like the upgrades to Ethereum, on Coinbase, they had an option for you to be able to stake your Ethereum. So you stake your Ethereum to help out the network, to make it more secure, things like that, and they give you a reward from the network, and it goes right into your balance. And the difference between coin and token, I think it's in this slide, in the slides or whatever, but token is something that has utility on their network, so you use it for a certain reason, and then a coin is just a coin that they use. All right, let's see how long this video is getting. 7. Okay. So a SEX versus a DEX, centralized exchange, decentralized exchange. Centralized exchange are going to have the KYC, like I said before, and they're going to try to prevent money laundering and other lawful activities by doing this. It's similar to the stock exchanges like Robinhood and things like that. So that's their number one priority, is to be in profit. So they're going to have a lot of different activities going on there. The decentralized exchange, anyone can go on here from anywhere, and maybe you'll need one of those I forgot what it's called right now. I can't even think. But like Tunnel Bear or something like that. Maybe you'll need something like that to hide your IP address. A VPN. There we go. If you're using this, then you'll be connecting your funded crypto wallet to make a swap for a coin or token. Meaning that you already have cryptocurrency whenever you go into to do the decentralized exchange. Because I don't know, this is just me. I wouldn't really want to connect my bank information to something that is not really regulated all the way. So I would rather already have cryptocurrency and then go on there if I'm doing trading or doing futures. Futures are trading with leverage, if you don't know what that is when I'm saying that. And leverage meaning that you can trade, technically your trade is going to be worth more than what you set the trade for. So if I have $1,000 and I trade like $500 of that, right? I can do leverage of like a 5 times, 10 times, 20 times. So every single percent is going to be 20 times that move. So if I put $500 on it and it goes in the right direction, 1%, I have a 20x leverage, it's going to give me 20% on the $500, okay? And so forth and so forth. That's how that works. But if it goes in the opposite direction, 1%, then you're down 20% on that 500. So you get what I'm saying? It can go either way, of course. And decentralized exchanges include Uniswap, SushiSwap. If you're swapping for coins that are not on exchanges, these are decentralized exchanges that you can connect to, and you can do that. And then there's also decentralized exchanges where you can go on and they're not centralized, of course. How to buy on your phone versus the computer. Whether you have an iPhone, Android device, you can download your favorite exchanges app or visit the decentralized exchange through your phone. Centralized exchanges can normally be found in the App Store. Would be the most efficient way to access them, of course, rather than just going through like Safari or Google all the time. Just download the app. And then decentralized exchanges aren't going to be found in the App Store, meaning because they are decentralized. So using the computer would be the most efficient way, but you can't go through your app's browser like a Coinbase wallet or Trust Wallet, or you can just use your browser and then connect it, and it'll do it like that as well. And the reason why I just go through this so fast is because it's pretty self-explanatory. If you just go to the website, it'll say connect wallet, and that's what I was talking about in part 1, to make sure that you know what you're connecting your wallet to, because you can be hacked. And there is no best time to buy crypto, meaning that no one can time the market. You don't know exactly what's going on. Clearly, we've been going in a down slope, or we've just been down for about almost 2 years now. So clearly no one knows exactly whenever, things are happening and things like that. But there are market trends that can help you realize exactly what's going on based on what it's done in the past. So maybe it'll repeat itself. Price history, of course, same thing, goes off market trends. And then cycles. So the currency markets and just markets in general tend to move in cycles. I've noticed that the Bitcoin market and just crypto in general tends to move on every 4 years or so, off of the Bitcoin halving and the presidential elections. And now BlackRock is trying to, well, many other companies of course too, but everyone's trying to get that spot ETF and all that. So we're coming up on that next year. Dollar cost averaging, it would be the best way to just buy here and there, not like lump sums, like too big, depending on, of course, how much you have. Like if you're investing 10,000, don't just go and invest 5K in like one freaking day. You can if you want to, but like I said, been there, done that. Not the best decision. Ultimately, the decision of when to buy will be based on your individual investment goals. Make sure you know that before. Your risk tolerance, but of course that can change. Risk tolerance, how much you're willing to lose, and your financial situation, how much you have. It's important to do your own research and find a financial investor if you would like. Alright, so we're not going to get into trading indicators on this video. It's going to have to be in the next one, because I want to be able to possibly show you these, but I don't really have to. You can go and look at them. So we'll see in the next one. Catch you guys in part 3.